Let's talk to Tim Gregory. He's an investment manager for Vermeer Investment Management. Very good morning to you, Tim.
Morning, Nick.
Okay, we've got three subjects to talk through this morning. Let's talk about crude oil.
Right.
Down 13 days on the bounce.
Yeah.
Is this a supply-demand imbalance? I thought the idea was that with the Iran situation, this was going to be well bid and we were going to $100.
Well, absolutely. So if you think back to earlier this year when we've been talking in the past, we thought that the oil price would go higher because there'd been so much pressure on there being no production because oil companies have really kept their discipline, and there'd been a situation where there's been problems getting oil out of the Permian this year because of pipeline issues. So the oil price was squeezing higher, and as is inevitable with the oil price, when it was getting to $85, $90, everyone was saying immediately it must go to 100, so it's got to go to 100. So of course, and the Iranian situation was cited with the supply coming out of the market as the main reason for that. But as we know, subsequent to that, actually, when the details of that have emerged, and one of the big issues was whether the Iranians would still be able to supply crude to the Chinese. But actually, as it turns out, that was part of what was waived. So an enormous amount of, on the face of it, the Iranian production that was expected to go offline does not appear to be going offline now. So we had started off with the oil price being overbought, gets squeezed too high. Then the news on Iran was less bad than expected. And of course, throw in additionally, probably, what you're seeing in overall markets is concerns over has growth peaked?
Yep.
So put those things into combination. Crude oil price, everyone was positioned long for the price to go squeeze to 100 because of the Iranian situation. What happens? Oil price straight down the gurgler, down 13, I think, days in a row, I think you said earlier, down 7% yesterday. Now, normally, that sort of move would look like a capitulation. But, who knows whether, because markets are going to continue to struggle with all the other uncertainty that's going on, whether we're going to see lower prices yet. But some of those, those issues that, in general, demand has been pretty robust, and the fact that the oil industry as a whole has really maintained its discipline since the problems of very weak oil from 2014. So, there are these issues that, supply is, constrained to a degree. And we'll have to see what response we get from the OPEC countries as well. So lots in the melting pot there at the moment. Yeah.
Talking of melting pot, Theresa May, 2:00 kick-off today. Obviously, markets, the currency, British pound, well bid this morning. FTSE down a smidge, European concerns. Are we now at end game? And I hate saying that.
I think it's far too early to tell. We've got the document, the Cabinet are going to meet. There's very big questions as to the response of the DUP. Can he get through Cabinet? If it gets through Cabinet, can he get through Parliament? So there's a long way to go. So at the moment, the pound, as you say, is steady. And that sort of, to me, is suggesting we just don't know the outcome at this point in time. I think markets, are generally weak on other issues. I think people are concerned about the Italians holding the line on their budget, which is going down very badly with the Europeans. There was some weak German GDP data this morning that's unhelpful. And, US equities, which have been so strong for a long period of time, have, as we've noted before, been, started to struggle somewhat now. So, markets are in a downdraft. The pound, is steady, and that tells me that the market doesn't really know about Brexit at this point in time. It's still, still in the melting pot. Another thing in the melting pot.
Let's wrap up. Janet Yellen did a weekend FT lunch commentary and talked about the Federal Reserve. Obviously, Mr. Powell's talking this evening.
Yeah.
How much pressure is he really under from Mr. Trump?
Well, it's hard to know really, but I think he's got to stick to his policy if he's going to be seen to be a strong federal governor. If he was seen to be bowing to the president's wishes and his criticisms, it would certainly weaken his position going forward. The big issue, though, is, to the point that we were just discussing earlier, has growth peaked? So the Federal Reserve has tightened policy in response to the fact that economic data has been very strong, that employment is pretty full, and that there have been some signs of inflation reappearing. And of course, until a few weeks ago, the oil price was part of that.
Yep.
And now the oil price has come rattling down over the last few weeks, reducing one of the inflationary pressure that's been, that's potentially, going to cause an impact. So my sense is that he will still hike interest rates in December, but that it will be accompanied, particularly if markets remain difficult, by a much more dovish tone. And then, as opposed to the sort of general view of how many rate hikes that we'll have next year, we're more likely to be in.
So do you think that's a policy change?
Well, we'll have to see. But I think, there is some evidence that growth is peaking. So, how far the Fed will need to tighten further. So at one point we're at a situation where before this year and for next year, well, that, now seems less likely. And some people are even suggesting that there won't be a hike in December. I think personally that there will still be a hike in December, but it will be probably accompanied by much more dovish commentary.
And just to wrap up, equity markets higher or lower into year end?
Well, we talked last week about the possibility of a year-end rally, and also, noted that it could start from a lower base. Obviously, we had a big spike on the relief rally post the midterm elections. There was a big rally when we were here last week. Since then, markets have fallen back, and it does look like in the short term, we may well go back down to the lows that we saw, in October. But, I think a more dovish hike, if that's what we get from Jerome Powell in December, and as I've said before, if we hear more conciliation from Chinese and the US talks into the year end, that could help set up a year end rally from a lower base, and obviously that would push markets higher into the year end. And I've said before, I think it's difficult for markets to get back out the top end of the trading range, which is 29.30, and we're a long way away from that now. And of course, if we go lower, that'll be more the case. So I think in a trading range, probably lower first, rally into the new year if we get those two things, and then 2019 another choppy year.
On that note, Tim, thank you very much.
Thanks very much.